As part of our managed investment solution, Sarwa Invest, we have halal portfolios, Sharia-compliant portfolios. Even for our savings accounts, we have a Sharia-compliant option. That is something that I think when our founders had started the company, this was something that was a core focus. Taking that first step to invest is actually the most challenging to do. I always say, when I speak to people, it's like that is the hardest part is actually just starting. And I think if you don't have a good sort of personal finance setup prior to that, it'll always make that starting point more difficult, right? Whenever I speak to especially young investors, before you even start investing, there's a lot of things that you need to do before even starting.
Hi everyone, welcome to Dollar Diaries. Today we're joined by Akshay Iyer, a private wealth management specialist at Sarwa, a Mubadala-backed wealth management firm that you probably would have heard of. Thank you so much for being here.
Thank you for having me, guys. Really appreciate it. Excited for the conversation.
Likewise. Just to start off,
we're looking forward to this for a long time. The whole team, yeah.
Yeah, me too. Yeah. I know. I'm super excited.
Yeah.
And I love what you guys are doing too. It's awesome.
Thank you. I mean, he's he probably changed his ticket just to sit
and
have a conversation.
I did.
Dude, I hope I live up to it.
It's just, I like meeting people. And what sort of intrigued me first was this trekking trip you looked at. And I was like, this guy might seem like a very interesting guy. He's gone trekking, charitable trekking in Nepal. And that's what fired it up. Not the finance background, not Sarwa, none of them. I was like, damn, I just want to understand what led him to go to all these treks.
Yeah, look, I'm big into the outdoors. Yeah. And I think that's something that I definitely do miss being in Dubai. I still get to go to Ras Al Khaimah, get to go to Fujairah and get a little bit of that stuff when I'm here. But my love, my passion is being in the mountains, going hiking, doing these things. So, I mean, for some context and background, I did these charity treks when I was 17, went to Everest Base Camp, which was a 12-day hike, about 10 days up, about 2-3 days down in winter also, which is not the best time to go because water freezes and pretty challenging, hiking and trekking in sort of negative 10 degrees. So did that with my dad when I was 17 years old for charity. Did Ethiopia a few years later, Ras Dashen, which is the tallest mountain over there, which was super fun. A little bit more intense on the weather front, funnily enough, more just wet, very, very wet, hiking in, complete pissing rain for 3-4 days. And I got a bug too, which was not ideal for a few days. But these have been amazing experiences. And still when I haven't done something as big as those since then, but still try to do as many as possible when I can.
It's sort of, you want to see that in yourself. You want to sort of go in the wild and then do outdoorsy stuff. And I was like, damn.
No, there's not a lot you could do for that here in particular. I mean, there's the Sarwa to Heaven kind of trek in Fujairah, right? But that's about it.
You know what's so interesting? So I lived in Vancouver, right? Vancouver is one of the most incredible places for outdoor activity. You've got the beaches, you've got the mountains, you can go skiing, hiking, you can do climbing, everything is accessible to you. But Vancouver, British Columbia in general, the weather, it rains a lot over there. Right. So even though you have all of these things accessible to you, the weather just doesn't, when it's nice there, it is incredible. But a lot of the time, the weather doesn't lend well to doing these activities. Now, in the UAE, when I first moved, I was born and raised here, but I lived in Canada for a very long time as well. And then when I moved back here a few years ago, one thing I was always a bit nervous about was, okay, will I be able to do these outdoor activities that I always loved doing? And I thought, okay, it's going to be a little bit challenging. You don't have as many as you have over here, as you just mentioned. A lot of people have the same sort of thought. But the truth is, there's actually loads of things to do over here. You just have to get out of Dubai, is what I've seen. So in Iraq and Fujairah, there's pretty much in the winter, every other weekend, we pack up the car, we go to these places, we do diving in Fujairah, rock climbing at Ras Al Khaimah, some hiking in Ras Al Khaimah. So there's actually a lot more stuff. And because the weather's pretty good here for the most part, I think that I was actually doing probably just as much, if not more, over here than what I was doing in Vancouver, which is kind of crazy to think. So yeah, it's been a good grounding factor to kind of be in Dubai.
I feel like now you're gonna get texts from both of us asking you where to go and what to do.
I'll do you one better. Just come with me. Just come with us. Because I think a lot of people, they always find the biggest barrier is actually just going to do it. Yeah. And granted, there's not a lot of information online about this hike, and there's not a lot of information about trails and these things. Just go with somebody. Come with me. I go with my friends all the time. I'm always trying to get people to come because they're like, oh, I'll do it. And then when they always end up saying no because it's a 6 a.m. wake up, it's this and that. Yeah. But when you actually do it, you'll be like, okay, I'm so glad that I actually did this.
It's like the matchstick, and it starts with a community. That matchstick starts with a community. Like the only reason, like I had to wake up for the first time in like a few months now at 5:30 in the morning to go for a run. And just I didn't run for like maybe 2 years now. We ran for 7.89 kilometers with my close friend. I was like, damn, this actually feels good. And then we started like, do you want to move back, man? Like we gotta catch up more often like this. So it's like a good like bonding session with your friends.
Absolutely. I feel like going through shared trauma.
Yeah. Look, I think your sort of your party friends are very different from friends that you do activities with and stuff.
Yeah, true.
I did this, the 10K that happened in Dubai a few months ago.
Yeah.
This disastrous 10K that was just basically people dancing in the streets and not really running. I tried running, tried dodging the crowds, and I was knackered by the end of it. And this is like, I used to be in school and through uni, at least for the first couple of years, I was an athlete, right? So I was a completely different person, and now I'm running 10K and it's taking me ages. And at the end of it, I'm not actually disappointed. I'm happy because I'm thinking, okay, I could do this again and again and again. But I feel like this city is so fast. If you don't make time for it, you don't really ever get that. Right? You got to sit down and schedule that out.
100%. This is, the city that we live in is the most fast-paced city I think that I've experienced in a long time, because I've spent a lot of my time over here, and just I think at this present moment, Dubai is really, really fast. So if you don't schedule time for it, if you don't make time for these things, just look away and day's done, the week's done, the month's done, the year's done.
Mm-hmm.
Like imagine just coming from Canada, where it's like Vancouver is, I'm assuming it's like a very slow living place, but it's also commercial.
To some degree, yes.
Yeah. And you like it was a very big shift for me in Melbourne. So coming back here, I was like, I don't want to, I want to stay back for.
Vancouver and Melbourne have a lot of parallels, right? When I was in Melbourne earlier last year, obviously spent a lot of time in Vancouver, and I think there's just a lot of parallels and very similar pace of life.
Right.
Vancouver is almost like a mini city, I would say. It's not like your Toronto or your New York or London.
Mm-hmm.
It's a beautiful combination of, look, if you want city and if you want the benefits of a city where, good restaurants and obviously nice architecture and these sorts of things. But if you want to get out and, go to the beach or go into the mountains, they've got that also. So it's a beautiful balance of both.
Weirdly enough, Vancouver was the only city in like that Western Hemisphere side of things that reminded me of old Europe.
Yeah.
Like it looked like Vienna, but with upgraded architecture.
Yeah.
Because people are relaxed. There's actual culture because you have different communities. Food is good and you have nature, right? And everyone's kind of living this almost serene lifestyle, but you got upgraded architecture and, there's actual commercial access for different companies.
Oh, for sure. I mean, it's Vancouver is the west coast of Canada. So it is the gateway to Asia. All your China, Japan, all of these businesses and all of these markets are very, very accessible, from Vancouver. So it's sort of that gateway to North America for the most part. I mean, kind of similar to what you have in San Francisco and also in Los Angeles. It's just your Canadian version of it.
In Canada. And there's a lot of natural minerals and resources. Do you guys in Sarva have commodities? Do you guys have crypto? You guys have many things, but you're only based in the UAE currently. When are you guys planning to move abroad?
So look, the beautiful thing about Sarwa is, even though we are a localized platform, right? We started here in Dubai in the DIFC. We've kind of expanded to Abu Dhabi, and ADGM is our HQ now. But we have clients from all over the world.
Right.
At the end of the day, we are a local company, but the actual platform is a global platform.
Right.
We work with international brokers, Saxo Bank, Alpaca Markets, who are in Denmark, in the United States. They have custodian banks, which are situated also in Western Europe as well as North America. And because of that, we're actually able to onboard clients globally.
So Abu Dhabi and Dubai gives you guys the freedom to operate as an international business and just have all the fundamental benefits that an international business has.
Yeah, exactly. And more specifically, being in these offshore economic free zones, right? We're an ADGM, Abu Dhabi Global Markets, regulated by the Financial Services Regulatory Authority over there. That comes with a level of almost like a gold standard when it comes to these financial services regulation.
I feel like having this localized presence with global access allows you to understand dynamics or demographics in the fintech FIG kind of space in multiple regions, right? And are you seeing some kind of evolution here that maybe you aren't seeing in the West, or are you seeing something in the West that might be lacking here?
Yeah, I mean, look, one thing that I've noticed, I think for when I first moved over here, after living in Canada for a while, I was a little bit surprised with the access to investing over here. To be honest, there wasn't as much, there weren't as many investing platforms. There was a lot of hurdles to investing, high minimum entry points, a lot of platforms that had high commissions. There were these snake oil salesmen, to be completely honest, who would just sell offshore products that would lock you in for 20 years, 30 years, all of these sorts of things. And it was quite surprising, to be completely honest. And I said, okay, the investment landscape here is very, very different. A lot of that is to do with, companies and platforms that are embracing technology. So no more do you have these, I mean, they're still present, look at some of these schemes, but it's way more common now to basically be able to invest in a variety of different asset classes, or whether that's stocks or bonds or crypto, even options trading, whatever that might be, from a phone in your hand here in the UAE, which is something that historically, 5 years ago, if we were having this conversation, there was not many players around at all. I think we were the first region's first digital wealth management platform who kind of started that. And since then, there's a lot more players. And I love to see it, right? Because I think not only is it putting us up on the global scale, but even beating a lot of places in the world when it comes to access to investing. We have clients from all over the world. It's quite surprising sometimes when, I have clients who have Sarwa accounts in Europe. They have a lot of investment options in Europe, but for a lot of people, it tends to be a better option than what they might have over there.
I feel like you've cornered a market, or not cornered, but you're trying to corner a market through your Sharia-compliant funds as well, right? Which is extremely important, because at some point in Western Europe, in North America, in even maybe South America, there wasn't access to like the Wahids of the world and the Curate Capitals, and now you guys, right? And when you started creating products that are Sharia-compliant from an international Sharia board standpoint, which again is different in every regulatory environment, right? Because Indonesia is the gold standard for Sharia compliance, but the Middle East still took a while to catch up, and now you guys are sort of selling these products to the rest of the world, which they don't have access to otherwise.
Yeah, like 100%, right? As part of our managed investment solution, Sarwa Invest, we have halal portfolios, Sharia compliant portfolios. Even for our savings accounts, we have a Sharia compliant option. That is something that I think when our founders had started the company, this was something that was a core focus. We are in a region where this is of extreme importance to a lot of our investors. We need to make sure that we can provide access to it. Now, and the best thing about it is, look, we work with asset managers all over the world, right? Your top ones, BlackRock, Vanguard, these big ones that you've heard of. They have internal Sharia Islamic scholars that do the screening methodology for all of these funds, right? So they have something called a business activity filter, making sure that the funds, don't have companies in there that engage in prohibited activities like alcohol, tobacco, gambling, whatever it might be. There's no exposure to, high interest or excessive leveraging. And then if any of these companies fall through into the screen, they have something called a dividend purification filter. What that is, if any of these companies go through, the dividends that they're paid out, they go straight to charity. Like, why this is important is because if you're an investor who has these religious obligations, you feel comfortable knowing that the money that you're investing actually is going towards something that aligns with your values. And this is something that we've seen, honestly, in the last few years be of extreme importance to investors. I think it's an interesting one. Like, a lot of people, when you think about investing, you say, oh, like, I'm putting my money away and it's going to grow one day. But, what you're actually doing is you're putting money aside that's going towards a company that is going to fuel their business activities. It's very important for a lot of people to make sure that whatever those business activities are, is that they align with their values, right? This comes in the form of Sharia compliant investing. It comes in the form of environmental social governance investing, which is what we also offer. And then a lot of other filters are coming along the way. So this is something we also haven't seen in a while, right? Where these screens and these different styles of investing are of extreme importance to investors.
Absolutely. I feel like, you see Investcorp out of Bahrain, they're doing Sharia compliant funds as well, right? And there comes almost a burden of education on you guys for that, because digging deep into the point you said about buying into a company, because see, if you were to sit down and say, I'm going to angel invest into a startup, you'd sit down and do a bunch of due diligence. You look at their legal side, commercials, financials, operational capabilities, and how they can scale up. And if you buy a stock in the stock market, it should be the same thing. You look at their company, you say, hey, I'm actually giving them money to grow. or to scale or to improve what they're doing currently. And if you think of it from that standpoint and then add on the overlayer of Sharia compliance, then do you feel like there almost exists a burden of, okay, we need to inform our customers and make sure that they're educated in what they're investing into?
Yeah, look, 100%, right? I think at the end of the day, education is going to be the most important thing. It's the fundamental thing to make sure that your investment journey is smooth and that you don't need to worry about too many things. Investing it's a very challenging thing to actually sit down and say, look, I'm going to, especially for first time investors, right? To say that I'm going to invest my money into whatever it might be. There's so many things that people are concerned about. What are the fees about, this? Is my money locked away? What am I actually investing in? Is it safe? Is it secure? All of these things. So to take that first step is one thing. We found that the more educated people are from what they're investing in, from the actual underlying investments to the platform to whatever it might be, it makes their investment journey so much easier. And this is a combination of just education for personal finance stuff, but a huge part of it is education about what they're investing in. The more that they know about, as you mentioned, right? Like,
Clears
what
up
am
the
I actually
misinformation.
investing in, right?
Yeah.
What does this company do? What are these things? And I don't think you need to have, really, really, really detailed notion of what every single company does, because for a lot of people, they invest in ETFs, right? Index investing. They invest in thousands of companies. But overall, if there is some sort of screening that's done and it aligns with their values, then it's a really good place to be in.
I looked into Sarwa's Sharia-compliant funds because for me, I need to invest into that, right? And I was trying to get access to Sukuk bonds and a mixed bag of Sharia-compliant ETFs as well as Sukuk bonds. And I was trying to sit down and see how I could structure that. And I feel like Sarwa allows you to do that, right? It's fixed income as well as equities. And you put it together and now you have something you could potentially lock away for a few years, but there's no lockup period. It just gives you that peace of mind almost. But so from that perspective, so you've kind of covered the asset classes and the democratization or access to investing and pulled this region up, to the standard of what was in the West, like when you came back from Canada. But so that's phase one. I feel like phase two is now expanding your product portfolio or asset classes like we were talking about. So where does that take you?
Yeah, so that's also a really interesting one. So when I joined Sarwa in November of 2021. And the week that I joined was when we launched Sarwa Trade, which is our DIY trading solution. Now, my whole investing ethos and my understanding of investing was always quite rooted in passive investing, right? Tracking globally diversified ETFs, letting them appreciate over time, rebalancing accordingly, the most standard thing, right? And I think that's the way that the majority of people, invest in most places in the world. It's very easy. It's very low cost. Makes sense for a lot of people. That's what Sarwa was built on. Our investment offering, the core initial solution was Sarwa Invest, your managed robo-advisory solution. And when I joined and we launched Sarwa Trade was always meant to be more of a complementary feature to Sarwa Invest. It wasn't supposed to be, a full-flung trading solution. Now, since then, we have, we started with Invest. That was a good few years, right? Sarwa started in 2017. Sarwa Trade came on in 2021. Since then, we've launched crypto on the platform. We've also give you access to exchange-traded commodities. We have a savings solution. We have options trading. And, the sort of goal, I would say, and what our founders, what their sort of vision has been for a while is to really be an all-in-one personal finance platform, to be able to consolidate all of your assets in one single place, as opposed to having things all over the place. We want to basically be, your private bank or your bank
all-in-one app.
All in one without the headache of being a bank, if that makes sense. And I think the reason why this has worked quite well is because I think if we were, and I think this goes also to being a fintech company, to being a startup company, I think a lot of companies can be quite headstrong with, initially Mark, Nadine, and Jad, our founders there, the sort of vision was a passive robo-advisory solution. If they get stuck with that to today, I don't know if Sarwa would be the company that it is today. We found over time, the investors and a lot of young investors also, they don't want to necessarily be told that, look, this is the only investment solution for you. Yeah. They want to also take control into their own arms. They want to basically make their own decisions. And we found that, look, for DIY investors, a great way is to empower them with these solutions. And that has actually proven to be very, very successful for us. The more trading side of things, the more crypto side of things. Granted, we're in a very, very exciting and dynamic market at the moment, which is, propelling a lot of that. But a key part of it goes to, look, if your client base wants something, you also need to respond to that instead of just dictating what they should do.
Welcoming of all risk appetites. Initially, because robo-investing was, okay, put the money, you'll be safe, everything's fine, don't think twice. But over time, you guys have been iterative and sort of understood how the market works.
Yeah, look, for sure, right? And then I think for that, it goes with two things, right? Because at the end of the day, also, especially being a financial advisor and working in the advisory, sphere of things at Sarwa, we want to make sure that we still have a responsibility to our clients, right? We have a fiduciary responsibility to make sure that they're investing in things that align with their goals and align with their objectives, and make sure that the risk is managed as well as it can be. Sarwa Trade now, look, that is a DIY solution at the end of the day. So, a lot of the clients, they're taking their own risks, but it was clear that with that comes, it obviously comes with more risk, but it also comes with a lot more opportunity and a lot more opportunity for growth. The total amount of gains on the Sarwa platform that was released is over $100 million.
I saw that.
The individual investors are actually killing it. If this was a different story, right? If clients were doing really poorly, if maybe there would be some more concerns about these sorts of things. But the truth is that the Sarwa user, our client base, is doing really well when it comes to markets. And as I said, right, education is at the forefront of what we do.
Okay.
We want to make sure that people have the tools to really execute the sort of investment journey that they want to have, right? So we do this in a form of a variety of different things, right? We have webinars, we have blogs, we have in-person events, trying to get industry experts, trying to get, people from our team to really engage with people as much as possible. So the more informed they are as an investor, the easier that investment journey is ultimately going to be for them.
I feel like this could be hindsight bias, right? But now that you've said that, it makes perfect sense to me that you were almost compelled to release trading, because if you guys are looking at retail investors, their mandate is not to preserve wealth. Like, if you see someone put money into Switzerland or Luxembourg, they want to preserve wealth. They've got generational wealth, even if it's just a couple of generations. If you're looking at retail investors, they want to make money. They want to make wealth, right? Generate that. And I think you start that with trading, and then you move into that investor. I feel like if you guys are looking at being this almost holistic, all-in-one solution of financial services as a pocket personal, bank, then you really start with, hey, we'll give you as retail investors the ability to make money, and then we'll preserve your money. And we'll preserve your money through X, Y, Z, and, et cetera. So we have like a whole asset class kind of portfolio that you can put your money into once you've traded and made your money, which makes perfect sense.
Yeah, look, I think these things are not mutually exclusive. I think they actually work really well hand in hand. The majority of our users, they're not just trading, or they're not just using the invest account. They actually use a combination of everything. What I found, the most successful people are not just picking one or the other. They're diversifying, not just in their investment strategy or in their sort of asset class, they're diversifying in the sort of solutions that they use. Sarwa Trade, as you mentioned, right? The trading side, it's a great, if you're passionate about a certain company, a certain sector, a certain geography, whatever it might be, a great way to learn more about the markets is to get exposure, direct exposure to it. So we find that a lot of people, looking for opportunity, looking for growth, they use Sarwa Trade for that. They trade cryptocurrencies, they trade, regular stocks. A lot of people just construct their own portfolio on it. They buy and hold different stocks, and that's fantastic for it. We found that a lot of people then use Sarwa Invest for the long-term stuff, right? We don't have pension plans over here. We don't necessarily have your sort of long-term savings solutions for the most part. Sarwa Invest is a really good way to do that, right? Globally diversified, passive in nature, put your money away 5, 10, 15, 20 years down the line, you're going to be in an amazing position. Different risk appetites, all of that stuff. So a lot of people use that for retirement, saving for children's education, maybe looking to buy a house in a few years. That's a great solution. Then we also have a savings account. The savings account is great for, emergency reserves. It's great for maybe you're looking to maybe purchase a property in a year from now. Instead of putting it in your bank where you're not getting any rate of return, amazing. You can put it into a savings account that we have. So really, the combination of all three products are really what's, I think they work quite well in unison, as opposed to just, picking one or the other. And we've seen that to be quite a good way to invest, I would say.
The very crux of being a SaaS company is iteration, right? And I could be wrong, correct me on the figures, but I know that 30-35% of how much a SaaS company would iterate, especially in terms of, client-facing technology, is based on client feedback. So moving forward from this, would you say your iteration or the products that you put out are going to be particularly, for example, in Sarwa Trade, allowing people to to run algorithms instead of just, make a portfolio and construct it, but like Charles Schwab, wherein you've actually got algorithms running and you've backtested them. You've allowed, that trading view kind of system where you've got 6 months of recorded data, and now you've run an algorithm on Sarwa? Or do you think that's going to be moving into a completely new direction, which is new asset classes, and we will get into private markets now?
Yeah. So look, I think it's a combination of both, actually.
Okay.
Customer feedback is something that definitely drives the vision at Sarwa. We have an incredible product team. Our chief product officer is great at what he does because he's very clued on and keyed on to what the customer actually wants. We send out customer surveys. Our customer excellence team plus our advisory team are constantly speaking to people. We have a Slack channel that is dedicated. It's called customer listening. Every single day, like, people will post 4, 5, 6 different things a day of what people want to see on the platform. Now, the tricky part is there's a lot of things that people want to see on the platform. It's more about, basically navigating how to prioritize these things and how to make it ultimately work for the majority of users. But, when you asked about the algorithms and these things, like, look, this is something that we're living in a world where, trading and investing and the world of artificial intelligence is very, very interlinked. I could see something like this potentially happening in the future. I don't know about the near future, but probably in the distant future. This might just be the way that a lot of people invest. So it'll be interesting to see. But yes, at the end of the day, sort of client feedback is going to dictate a lot about how the platform grows. But at the same time, we also want to make sure that we are expanding the actual product suite when it comes to providing more solutions for all investors, right? Not just necessarily traders, but for the general investor who wants access to different asset classes, different geographies, different sectors and whatnot.
I was just running this idea in my head. I was just thinking, what if you guys have an AI-based selection tool where you can sort of data scientists and statisticians running and selecting a bunch of algorithms, and the investors get to choose, it's like a way. And especially in trading, high frequency trading, is that something that is interesting and that would sort of be prevalent in the future? And maybe not for Sarwa, but what is the future of the whole finance trading, quick money?
Yeah, look, I think this is a topic that's of interest to everyone at the moment. It's like, how is this world of high frequency algorithms, how is this world of artificial intelligence impacting the way that we invest our money? We are seeing it actually from the institutions. I would say that, historically, a lot of algorithms have been involved with trading, right?
Yeah.
For the most part. But I think now we're starting to see from the asset management level, from the fund manager level, they're starting to incorporate these tools a little bit more. I'm not 100% sure if they're doing it for execution decisions, but I definitely think they're using it as part of a way to formulate their research and whatnot. And I definitely do see this as being something for the future. When you talk about algorithms and stuff, we on the platform, and we've always had, I think a lot of people, when you say robo-advisory, a lot of people think that, look, a robot is behind the scenes and it's constructing the algorithms to then make the investment decisions and all of these things. It's not actually how robo-advisory works.
Right.
I mean, there actually are some, bots that make investment decisions and whatnot, but we started as a robo-advisory. At the end of the day, the underlying investment solutions have been constructed by our team. It goes through a pretty robust investment selection. We have an investment committee that follows a specific investment philosophy. Our Sarwa Invest portfolios are all based on something called modern portfolio theory. Tried, tested, it's pretty standardized for the most part. The way that we've had the sort of technology side facilitate that, and I'm talking about even close to 10 years ago, is on the invest side of things, automatic dividend reinvesting, portfolio rebalancing, all of that stuff. We don't have individuals who are going, we have thousands and thousands of clients. We don't have the manpower to go in and click and manually rebalance portfolios for people. So we have a system that has always done that automatically. So that's where we've kind of enabled that. But I definitely see in the future, whether that's a Sarwa thing or whether it's a thing for investing in general, I see this world definitely evolving and definitely playing a bigger part in the way that people invest and probably the retail investor invests. This has been something that's exclusive to your hedge funds, to your fund managers, your asset managers. But I definitely see the retail investor being able to utilize these tools.
I feel like there comes a certain level of competence that you need to even get into high frequency trading, right? Like, have you read Flash Boys?
I haven't, no. And I'll be honest, that like the whole side of the high frequency trading, even trading in general, it's not necessarily my cup of tea, or it's not really my expertise whatsoever, because I'm say for the most part, my investment philosophy and ethos is a lot more aligned with the passive investor. because I've seen it work historically for myself and for the majority of my clients. So I haven't really personally exposed myself too much to that
No,
sort of stuff.
I don't think we have either,
Yeah.
honestly. Yeah. Like I tried reading this book called Flash Boys, right? Just a little brief on it. So have you heard of Liar's Poker?
I have, yes.
Yeah, so the same guy who wrote Liar's Poker, which is a book about Wall Street in the 80s, he was at Bear Stearns, right?
Yeah.
So he wrote Flash Boys in 2009. And the entire book is just about how these small little prop trading shops in New York used to buy or rent out office spaces next to where the exchange was.
Yeah.
And they would dig tunnels underneath the city and get fiber optic cables just to get faster connection to the exchange, right?
Yeah.
Wow. And now you see how that's evolved, because now you don't need to be digging tunnels. Now you hire a grad like Citadel is doing, who's doing this PhD in maths and statistics, give them $25K a month and they do it for you. And it's insane because there is a whole world of investing and trading that we as retail investors, A, probably aren't educated enough to understand, but B, definitely don't have access to, because this is all, you're trading on bips and you're trading on, the ask and the bid, which you don't even have the technological capacity to do so, like the internet connection to do so. But I think what you guys are doing is very interesting, because you're educating people about long-term investing. You're allowing them to do their short-term trades by themselves, like DIY, like you said. But then you're also explaining to them about how wealth management almost should be viewed from a long-term perspective, right? But that brings me to, I guess, what people are doing with private markets now, because we had a conversation on call and I said, hey, Moonfire is doing something amazing in Europe. And you guys, I'd love for you to talk about that a little bit, because you guys are now talking to, I don't know if that's public data, but you're talking to institutions like this about democratizing access to private markets, like private equity and private credit. And that's something you were a specialist in, I guess, credit from that perspective.
Break it down, break the financial terms down. I understand
Which ones? I'm so sorry. Which ones?
Moonfire. What is Moonfire?
Moonfire is, do you want to take this? Or?
You can go for it.
Okay, they're a similar startup based out of Berlin. I'm fully selling them. They're in Berlin.
You should be selling Sarwa.
We're big fans of what they're doing.
They're based in Madrid, Singapore, Paris, Frankfurt, London, and Berlin. So Western markets developed. And what they essentially do is they say, hey, if you guys have got like $1,000 or $5,000 or $10,000, I guess, that is their cutoff. Typically, a BlackRock or a Blackstone or an Apollo or a KKR, in terms of private equity or private credit, would only allow institutional investors to come in, or high net worth individuals at such an extent that they're basically at the same margin as institutional investors. So like the 50 mil, 100 mil kind of tickets, right? Their smallest funds are about $1 million at a ticket. What they're saying, Moonfire, is we'll allow people to come in and get returns that are equivalent in proportion basis to the returns that BlackRock and Blackstone and KKR will give you. But you only have to give in, all this is private equity, so private companies and private credit. But the return we give you, is you're basically investing into their fund. We're fractionalizing their minimum ticket into 1,000 investors. Honestly. So you, as someone with $10,000, could sit down and have direct access to BlackRock's fund.
Very interesting.
Which has never existed before.
Right.
So my question to him on call before was, are you guys looking at doing the same thing? Because the Middle East is a hub of millionaires, right? And the ability to give someone, even like at a 10, 25, 50K check, say,
a gateway to the network?
A gateway to the Mubadas and the ADQs and the AIQs of the world.
Right.
You can sit down and invest into them, which is incredible. Right?
And I think this is the last frontier when it comes to really democratizing a specific type of investment, right? Private markets as an asset class is, at this point in time, especially in this region, is reserved to institutions and it's reserved for ultra high net worth individuals. Not even just high net worth individuals, right? Because some of these ticket sizes are significant. This would be an amazing thing. You were talking about what Moonfire does, and this is something that we would love to do also, right? To try to give access to these private markets. Now, it's a much more challenging thing to actually accomplish when it comes to, working directly with the funds, working with the regulators. There's quite a few different pieces that need to kind of be jigged around. But look, this is something that we would love to tackle.
When are you guys planning to introduce this into the UAE markets?
I mean, look, that's
under the wraps.
That's exactly. That's more of a product conversation as opposed to one, but it's something that we hopefully would like to launch in the future.
If you had, for example, a superhero to be your financial advisor, who would you pick?
So it's funny you asked about superheroes, because funny enough,
it could be a fictional character. Sorry.
If we're on the theme of a superhero, I don't really watch that many superhero movies.
Right.
But have you guys seen The Boys?
Yes, I have
I
not
haven't
seen The
finished
Boys. I've
it.
heard of
I haven't finished it,
Yeah.
but
Okay, so I'm
till
not-
season 2.
No, so
Do not spoil.
I won't
Yeah.
spoil anything.
Okay.
But if you're gonna pick a superhero, and this might seem a little bit unorthodox,
Okay.
but I would pick Homelander as
What?
my financial advisor.
What's
That is the opposite of logic to me. How does that make
know-
it easy?
You know what? I think that he is like the most straight to the point, straightforward person.
Okay.
But he's also slightly stupid.
What
I
are
mean,
his powers?
He's basically like Superman.
Yeah.
Okay.
But so the whole boys universe,
Right.
it's like imagine if superheroes were in like real life.
Right.
What would it look like?
Okay.
You know,
Living a normal human life.
yeah, but the reality and then how it works in the boys is like multi-national conglomerate basically
Right.
manages them, and they have
Right.
movies, they have this, that, and they're terrible people.
They have a marketing team and all that.
Mhm.
Okay.
And they're just like
Yeah.
horrible people
Okay.
who do
Yeah.
terrible things.
Like imagine the Flash running through someone,
Okay.
Yeah, like-
you know, and the person explodes. And, like,
It's like that.
that's you know.
So Homelander is like the leader of the boys, which is
Okay.
like the seven, which
The
is
one
like,
with the beard?
no, he's like he honestly looks like what is it? He just like blonde hair. He kind of looks
Yeah,
like a
yeah,
Superman.
yeah,
He has, like,
Blue eyes, blonde hair.
all that sort of
I
stuff.
think I've seen
Very
it.
Aryan.
yeah, he's like it's crazy,
Right.
like just so. But he's very like direct to
Yeah.
the point,
Yeah.
and I kind of like appreciate that. I feel like a lot of financial advisor that I've met in my capacity and
Right.
in working in the industry for quite a long time, there's a lot of fluff around things. There's a lot of sales sort of things, which I'm not a huge fan of. And I just think that like somebody like that is just very to the point with things.
Right. Is he good at like breaking down like all the financial terms? Like, can he do that? You know, is that his superpower as well?
Well, no, I don't think that's his
Right.
superpower, but I definitely think he could do it if
Okay,
you want.
okay.
He's just straight to the point.
That's what I need.
No,
That's-
I
yeah.
fully disagree. I mean, the obvious answer is Iron Man.
Iron Man, yeah, I mean, like that's
Playboy
also a movie that
billionaire.
Right.
I was telling you guys before when we were
Right.
talking about how old everyone is and stuff,
Right.
and like I remember watching Iron Man in the cinema. And that, Tony Stark would be a great.
When you were watching
advisor.
Iron Man, I was watching Ice Age 2.
Yeah, exactly.
I was watching Tari Zameen Par.
Oh, right, actually.
Yeah.
If you could go back, I mean, so how long have you been in Dubai for? You said 21?
So I was born here, lived here for a while,
Right.
then lived in Canada for about 8 years, and then moved back here a few years ago. So a little bit of back and
A
forth.
few years
Yeah.
ago. Okay, so if you could go back and give yourself one piece of financial advice, like from now, all that you've learned working quite literally in the industry, as well as moving to a city that's, you know, quite far and large, very fast paced compared to Vancouver, what kind of advice would you give yourself?
Look, I think for myself, I think that I did start investing quite early compared to the majority of people that I meet and speak to. But I really wish that I had even started even earlier, right? And I think that importance of starting to invest early, and you know, whether it's in ETFs, whether it's in individuals, whatever it might be, just getting started, I think would have been the most important thing. And I feel like I wish I started even in university, which I didn't. I think I started post-university when I had started working initially. But just getting started early, I think, is something that I really, really wish that I had known to do earlier. And I also feel like just not stressing about, you know, what the market is doing and what, you know, necessarily that money is doing. Because over time, you know, these things, you know, the longer that you have your money invested for, the less that the risk is involved. Things tend to smooth out. All of these, you know, you're sort of heard it before.
Yeah.
But I really wish that was the kind of the one thing that I had done earlier.
It's also, there's like a information asymmetry where people think that you need a lot of money to invest. You can just start with $100, right? Just put $100 into 2 ETFs, VO, PTX, and just observe it over the next 6 months and see how it performs, you know, see the trends and read historical data, read financial data of the companies that these ETFs have. Putting those first $100, it's going to light that match, you know, light that fire to just observe how the financial industry and these markets work. A lot of people just are scared to do that, you know.
Yeah, look, taking that first step to invest is actually the most challenging to do. I always say, you know, when I speak to people, it's like that is the hardest part is actually just starting.
Yeah.
And I think if you don't have a good sort of personal finance setup prior to that, it'll always make that starting point more difficult, right? Whenever I speak to especially young investors, right? You know, before you even start investing, you know, there's a lot of things that you need to do before even starting, right? You know, make sure you have an emergency reserve set aside, right? 3 to 6 months worth of expenses, you know, have that away in a flexible, accessible bank account, right? If you have any big expenses coming up in the near future, you want to buy a house, you want to buy a car, whatever that might be, maybe that's up to a year and a half from now. Also, keep that money aside in cash. You don't have that money invested in the markets. If you need that in a year from now and the markets tank, you're going to be in a worse position. Any high interest debt, don't start investing until you've paid that off, right? We get a question a lot. Should I take out a loan to invest money? No, you shouldn't take out a loan because that bank is charging you 40 something APR per year. No investment is going to give you that sort of return. Once you've done these sort of key steps, then it's a good place.
But the Fed rates are cutting.
Sorry?
The Fed rates are going down. Borrowing money is cheaper.
I mean, yeah, but
actually, this might be a good segue into this. So I don't want to put you on the spot.
Yeah.
But you said you started investing early,
Yeah.
and I'm assuming you were like in 4th grade when you started investing.
Definitely not.
But as someone who's a licensed financial advisor and also works in financial advisory, especially for asset management, wealth management, for our audience in particular, would you be able to give us a sense of what the market looks like for the next year? Because there's been so much turbulence, right? We've had elections across the board, not only in the US, but we've had elections in developed and developing economies. We've got rates that are cutting. We've got inflation that is still sticky, which is surprising. And we've got the UK now moving faster in terms of central banks compared to the US. And there's so much happening with AI and different industries. So would you be able to give us a sense of what you feel like the market looks like, an outlook almost for the next year?
The funny thing is the only certainty in what's going to happen this year is that we have no idea what's going to happen.
The certainty of uncertainty.
Exactly. Like nobody has a crystal ball. And a lot of people who, you've got economists, you have analysts, you have, hedge fund managers who are paid, millions of dollars to make their outlooks and their predictions for the year. This is actually my favorite time of the year because a bunch of asset managers, a bunch of advisors, a bunch of economists, they will say, look, this is my 2025 prediction list. A lot of big companies do this. Well, what I like to do is I like to fast forward the year and look back to see who was wrong and how wrong they were. The truth is nobody has a crystal ball. It is near to impossible to really dictate exactly what's going to happen in the market. Yeah, look, there's a sense of what can happen, but there are so many things, social, political, economic, that are so much larger than us as individuals that impact markets so much bigger. So I would say as an advice to people who are investing, don't get too bogged down in what's happening on a daily basis in the market. Don't even get too bogged down in what's happening on a weekly basis or a monthly basis. Because by the time that you have sort of figured out what's happening, the markets have already changed in a completely different direction. You as a retail investor, the tools that you have, and forget about just the tools, even, you have your own lives, right? You've got job or family and these sorts of things. So what we have seen, what we can look at is, look, what have we seen historically that have happened in the markets? What is the expectation? Historically, we've seen that a globally diversified set of investments, right, for the most part, the stock market has performed very, very well over longer periods of time. That during those periods of time, there has been market fluctuation. We have seen volatility. The markets, part and parcel about investing is it goes up and down. That is very, very normal, right? Now, if you have a long-term horizon, right, if you're investing, if you're a young person, and the question was specifically to young people, the best thing that you have on your side is time. You can have your money invested for decades. So if you're investing your money for decades, whatever happens in the interim is not very important. In the long run, and this is like, the craziest thing is when you look at some of these studies. Fidelity did a study about all of Fidelity is a broker in the United States, and they did a study on their investors who had forgotten their passwords.
Oh, wow.
For their brokerage accounts. These people had done incredible just from leaving everything alone, not speculating, not trading. This is a little bit more morbid, but the people who had passed away, even better. Because, by the time that the probates and wills and everything came into force, the sort of returns you're seeing is just by leaving things alone.
Yeah.
More often than not, just by having your investment philosophy set in place, having your limits, and just riding the wave of volatility, you're going to be in a really good position, but you just need to be patient with it. That would be something I would say for young investors. Just be very patient. I think it's so difficult because you want to see that instant gain, and you want, it's really challenging, I think, to put your money aside and to see volatility and to see not significant increases. It's like a snowballing effect. Over time, the more that you invest, the longer that you invest for, investing, and especially investing in the stock market, there's two key levers, right? Capital appreciation. So the value of the stock or the set of stocks that you're buying increases over time. The dividends that you're receiving also, those being reinvested, those two things together, compounding over time, that is like the magical formula for investing. That is really, what will set you up for success in the future. A lot of people ask me, it's like, oh, like, what's the best investor, or who's been investing really well in your book, or whatever it might be. It's not who you think. It's not your overnight crypto millionaire, and it's not your sort of person who's trading stocks on a daily basis. It's usually the person who's just doing the boring investment thing. They put money aside every single month, let it grow, let it appreciate. 10, 15 years down the line, they are cruising.
And I'm assuming Sarwa has an auto invest feature as well.
Exactly. Yeah, that
makes life so much easier.
Yeah, and we have it on the trading side. So let's say if you want to just like put money in and get it automatically invested yourself, say, hey, look, I like this X, Y, and Z stock, or I like this ETF. You can do that and it gets automatically invested. And then we also have the managed Sarwa Invest solution, which you just put money in and automatically gets invested.
Dividends reinvested.
Dividends are reinvested, all of that stuff. So it's kind of the dream solution for a lot of people who just don't have the time or the knowledge or the inclination even to kind of invest for themselves.
Like this is very sound financial advice, because
yes,
you increase the hold period to infinity and your returns automatically balloon.
As time goes on, the risk also reduces, right?
Absolutely.
Because the longer that you have your money invested for, the less volatility that you experience. Who are young, the advantage they have is that they can have a higher risk profile because they have more time in the market.
Absolutely. And I feel like we're running out of time, so I'm going to hit you with a quick, and I feel like I do this with quite a few people, but you had $1 million in your hand right now. Where would you put that? And this could be, honestly, it could be real estate or startups, or it could be anything. You could allocate as you'd like. If you had $1 million in your hand, where would you allocate that?
Okay, so if I had $1 million, and you know what I'll do is I'll answer this as myself first, and then I'll answer this as what I think that the majority of people should do.
Okay.
Because I think
why are those two things separate?
I think they're extremely different for what the majority of people should do.
He has a fiduciary duty to...
Yeah. And look, not even just that, because and the key thing about this is every single, the reason why I think personal finance, it's the most personal thing to you as an individual. Each person is going to have their different journey. Each person is going to have their different sort of way of how they want to do things. Most importantly, everyone will have a very different risk appetite to what I might have, to what you might have, to what you might have, right? It's going to be extremely varied. Now, if I got $1 million at the moment, like I think from that $1 million, half of it straight away, I would just put into my managed investment solution that I have already. Right? The exact same thing.
Okay.
Globally diversified set of ETFs. Half of it goes there. Amazing. The other...
Sorry, I'm going to cut you off there.
Yeah.
When you say globally diversified, how much of that is developed and developing?
So the way that we approach it at Sarwa...
Oh, this is Sarwa's...
Yeah.
Okay.
Yeah. So this is just like our Sarwa Invest.
Gotcha. The
majority of it is like from an equity standpoint, we follow a market capitalization approach.
Mm-hmm.
So if the US economy dominates the global economy as it does, it represents around 50% of the global economy. We have that amount in US equities, for example. Developed markets, maybe, 30%, emerging markets, a little bit less than that. We've got some real estate investment trusts. We've got some fixed income ETFs also in there. Very small allocation for myself for the fixed income, because I have a long-term horizon, right? So I'm not too focused on that at this point in time. So straight away, I would put a big chunk of that already that will go over there. I would say maybe 300 million. Oh, sorry, we didn't do 100 million, right? We did 1 million.
1
so
million.
300,000. Give me 100 million. 300,000. I would probably put in something a little bit more active. This is any stocks, cryptocurrencies that I'm passionate about. I'm not going to say sort of which ones, but there's, I'd probably put into that. And then I'd do probably the other 2 million towards some more impact investing,
200,000.
200,000. I'm getting really confused with this. I really want the 100 million.
I know. I wish I could just give that to you.
So the remaining 200,000 probably do something more impact investing, right? So
cool. Okay.
Things that I'm passionate about, certain causes that I can get involved with, but on the investment side of things.
Any causes you want to give a shout out to?
Nothing not like charities, for example, but more technologies that I'm passionate, like that sort of stuff. Now, what I would say for the majority of people, let's say if you got, this magical $1 million, it goes back to what I was saying about the fundamentals, right? From that straight away, make sure that you have an emergency reserve set aside, right? Once that's done, anything beyond that emergency reserve, if you've got debt, pay that off. If you have, any big expenses that are coming up in the near future, set some money aside from that. Whatever you have remaining after that, a really good place to do is kind of maybe follow the core and satellite approach. So what I mean by that is, right, the core approach for the majority of investing.
Core?
Core.
What Core and site approach?
So it's the core and satellite approach.
Or core and satellite?
Yeah. So the core is, let's say that's 80% of your, let's say that's, 800K,
Okay.
which is going to be in something that's passive, globally diversified, based on academic research, based on industry research. This would be, index investing.
Okay.
Right? That remaining 20%, let's say you're 200,000, that can be in something, what's called a satellite approach, which can be more active, whether that's stock picking, whether that's cryptocurrencies, whatever it might be, whatever you're comfortable with, that's always a good place to start with. I would not go gung-ho and just put all of that money towards one individual coin or one individual stock, because at the end of the day, that's the level of risk and the concentration of risk when you do that is so much higher. Yes, you can achieve incredible results. I think more often than not, we hear about the people who achieve these great results, but the likelihood is the more people are actually underperforming the market when they do that.
Do you guys have Trump coin on Sarwa?
We don't, but we've had, I'm not joking, an incredible amount of requests for Trump coin in the last.
You have a request now not to launch.
Not to?
Coin, yes.
I would. I would put all the 1 million in there.
It goes. This also goes back to the regulators, right? So I think something that we are very proud of is, because we work with regulators, we just can't have anything on the platform. And I think this also works to protect investors quite well. But it has been a huge, huge request over the past 2 years.
I can imagine.
Yeah, honestly. I think that might be our time for today.
Yeah.
Okay.
That was it was a lovely talk, guys.
Yeah.
It was a beautiful session. I don't know how long we've taken.
I don't know either.
I just gotta. No, thank you so much.
Guys, thank you so much.
Absolute
it was a pleasure.
pleasure to talk to you.
Thanks a lot.